Hey, so the Feds met on June 16th and caused rates to skyrocket upwards. What happened? Let's talk about it. So the Feds finally acknowledged that there's inflation in the marketplace. We're going to see 3.4 inflation towards the end of the year after being very transitory. But it wasn't that caused the rates to go up. So also, Fed members greatly accelerated their outlook to raise the federal funds rate to 2023. Now, what that did was it gave implications that fears, if you will, in the marketplace that the Feds are going to start tapering the bond buying process that's currently going on, which is keeping mortgage-backed securities so low, keeping interest rates low, helping this housing market, this economy, etc. That caused interest rates to just go bananas. One thing I want to say that's very cool and I'm very proud of is I was able to lock all my clients in. I had a handful of clients that wanted to lock that morning, and this just kind of went out of the blue, and all of a sudden rates were going up, 25, 26, 27. We thought it might happen, but we weren't sure. But we were on guard, and I was able to lock all my clients in. I got my last lock confirmation in at 11:59 when I got my first rate increase, like they were freezing the markets at 11:59. That's what I do for my clients, and that's what I'll do for you.